Hey everyone, I'm here with Bryan Landman from the Federal Savings Bank. And this guy has actually helped me the last 2 years in real estate in Miami before I moved to Naples. And because he did such a great job taking care of all of our customers that I thought we were not going to close several times and I was going to lose money maybe too. Um, because deposits on things and I learned everything the hard way. But with people like him holding your hand a little bit and kind of teaching you, it makes things a little bit easier. So I wanted to take this opportunity to educate you guys or have him educate you guys on all this mortgage process because there's so many levels to real estate. There's single family homes, there's condos, there's lots, there's building on lots, there's rehabilitation loans, and then there's even buying other businesses. And there's different loans for everything. So I wanted somebody that's professional, that is an expert in this, to kind of actually tell you guys about it. So Bryan, say hello.
Hi, Lorena. Thank you so much. It's a pleasure working with you. I love working with you because you help the families, right? So you're always looking out for the customer and helping the family get into the home. And that to me hits a special place. So I appreciate it. And thank you so much for working with us.
I appreciate you.
Thank you. You too. And yeah, some of the deals that we've done, certainly we're not going to close and we save them, and good job on everybody's part there. So
I want to mention one specific one. There was one that took us, I think, 6 months to close, and it was intense. It was scary, and I was always anxious, and the buyer was always anxious, and he was always like, "No, I got this, cool, calm, and collected," and he just got us through the other side. So that just meant a lot to all of us.
yeah, and I actually spoke to them the other day. It was the husband's birthday, so I called to congratulate him.
That's so
Um,
funny. I actually ran into them on his birthday.
yeah, amazing, amazing. They're special people, and they're building up the house and doing a lot of work and making improvements. So I really like working with first-time buyers and educating them through the process. Uh, Veteran loans. We're actually a veteran-owned bank, so the Federal Savings Bank. I'm a vice president here, and we're federally chartered but privately owned. So we're owned by veterans, and we specialize in residential home loans and residential mortgages. So that's all we do as a bank, even though we're federally chartered. Really, that's just what we focus on. So we have a laser focus on getting families into homes.
So I love that you just said that because I get a lot of buyers that say, well, do I go to Chase or Bank of America, or can I call my friend's friend that's a broker, or can I call this? And I'm like, you know, you got to educate them on that too. So like, what would you say is a good way to say, okay, well, the banks do this and the mortgage broker does this and the savings bank does this?
So we're somewhere in between. We're an actual bank, but we do have access to a lot of different rates and a lot of different prices and a ton of different loan programs. So we can fit loans that won't work for the big box banks, and you're also not going to be a number. So you're important to us, you're a family to us, and we'll help you and hold your hand through the process. And at the same time, I'm not a mortgage broker, I'm an actual bank. So there's a responsibility that I have to do what I'm going to say to the client. And I don't have to charge points or fees on top because we get the money from the bank. So that's the difference. And we also have underwriting and processing in-house, which we can get into a little bit later, but it basically means that we can do the loans ourselves. I don't depend on somebody outside of the bank to tell me whether or not you're approved.
Okay. So another question I usually get is, so I'm a first-time home buyer. How much, what do I have to do, or what do I have to qualify, and why do I need an FHA or a conventional or VA? And they're like juggling all these things and naming all these things, and it's like they don't even know where to really hone in on what's going to be good for them.
So that's great. I love that people are doing research online and they're asking friends and family, and of course you, what type of loan they should be doing. And they really should come and talk to a professional, whether it's me or another lender, because the answer is you don't know until we check your credit, until you get pre-approved. And then I like to have that conversation. I'm not going to prescribe a loan program or a certain down payment assistance program to somebody without having seen the full picture and understood the full picture, because there is no perfect loan program. There's a unique mortgage for every single person. What you qualify for might not be the best thing for you. So we might want to tweak that and make that a little bit better for you, depending on what your financial needs are.
Okay, so I have a question as far as like condos go. Can you actually get an FHA loan for a condo?
So there's been a couple of big changes recently. So we're in 2020, obviously, and in 2019, they made FHA condos a lot more acceptable. So FHA is a specific loan program. It's backed by the government, so it's insured by HUD. And what it means is that they have to approve the condo that you're trying to purchase a home in. A condo is a legal definition. It's not doesn't have to be 30 stories like this one behind me. It can be a house and be a condo. A condo just means that you're sharing common elements, right? So not every townhome is a condo, not every building is a condo. So first you want to look into, is it a condo or not? Then the answer to your question is, yes, FHA does restrict what condos you can buy in. It's not impossible to do it, but there is a list that you can do, or we can get the condo approved. So just because it's not an FHA approved condo doesn't mean that it won't qualify at all.
That actually reminds me of that one person that he was a veteran and he wanted to live in a specific condo off of like, I think somewhere over here in Ontario or off West 60. And you said at that time that if when he really is ready to move forward, even though it's not approved, that sometimes you can actually get them approved, right?
Correct. What I do is it's very similar to FHA. The VA is the Veterans Administration. So that's a veteran loan. That's a fantastic loan. If you have served in the military, in any of the 5 branches in the U.S. military, then we can get you at least eligible for that loan. So reach out to us, find out if you're eligible. There's a huge benefit to using that program, and you can use it on condos. So our internal condo department will pull the paperwork, do all the work, and see if we can get that condo approved with the VA. It's a different process than FHA, but we can definitely get the condos approved as long as we have access to somebody at the association.
Would you say that there's like for first time home buyers, there's like at least like something that you know that you could do, like don't touch your credit, have some savings, like, you know, things that you can do to not mess up the opportunity to get pre-qualified?
There's basic guidelines that will apply for everybody, right? We look at 3 things. CIA should be pretty easy to remember. So credit is one. The higher the credit, the better it is. Okay. There's no hard minimum. It depends on the loan program, but make your payments on time. Don't have any collections. Don't max out your credit cards. Right, during the loan process, you don't want to apply for any new lines of credit, no cars, no new applications. Don't do any credit card application during the loan program. But before that, keep your credit as clean as possible, and we can review your credit and help you build up to where you need to be. Credit Karma and some of these websites aren't always accurate. They could tell you that your score is a 700, but when I go and check it, it's a 630, and you don't necessarily qualify for some programs because we're looking at different ratings. So you might not know what your credit score is as we see it. And that's the important one. It's not what Credit Karma tells you, it's what we see it as. And we have a mortgage platform to tell us that. The second piece is income. We're looking for 2 years of consistent, stable income. That would be the gold standard for mortgages. If it's a little bit shaky or there's a gap in between, usually we can explain it, but we really want 2 years of income. There's a difference between being self-employed and an employee, and we can go into that, but it makes no difference. We can work with both. So you're going to need tax returns if you're self-employed, and if you're an employee, we can use your W-2s or your pay stubs, or we can get the income directly from the employee. And then the A, CIA, is assets. So you want to have enough money in the bank to pay for down payment and closing costs. Right? Sometimes you want reserves. You don't want to spend your last dollar on a home and then walk into it and you don't have enough money to buy paint. But there's other things, like I know that we've worked out some deals with sellers where we've gotten closing credits back to the buyer from the seller, or in other ways, we can help out the buyers with that. So you want to have at least a down payment. It's not 20%. Even on a regular conventional loan, you don't need 20% anymore. So you can do 3%, even 3.5%. We have 0% program. My favorite is the VA loan is a 0% down. So 0% down, you can get the seller to cover the closing costs. There's a lot of different ways to do it. So don't be scared that you don't have enough money to buy. Have the consultation first. We don't charge for it. Like, we'll make you feel comfortable. We just want you to understand where you are. And like you said before, if 6 months later you're buying, then it took 6 months and that's the process. But I'd rather you come to me as opposed to thinking that you can't qualify and then stay in this cycle of renting forever, which is, usually the wrong move for most families.
I think that that's a lot of people that I come across. They just like, well, I wouldn't qualify. And then they get surprised when they go and speak to you or somebody and they're like, oh my God, I can actually buy something. And you're like, you see, all you have to do is go talk, like, or at least find out what's hurting you so you can start fixing it.
Right. So it's true. Look, not everybody does qualify, but I think it's like you're saying, most people, like especially with the veterans, they think that they don't qualify. Oh, I was only in for 180 days. I don't qualify, so I'm just going to go with the conventional loan. But you do qualify, and if you don't, we'll put you on that path to home ownership. Whether it takes a year, 6 months, 2 months, whatever it is, depending on how long that fix is. But we definitely want to put people on the path to home ownership and then guide them through that process.
I have a question because I forgot to ask something that had come into my inbox when I said, hey, send me your question. So with an FHA loan, they asked me if they want to go look at a house and they want to see something that's kind of like a fixer-upper, should they even consider it with an FHA loan because they're saying something about the roof or something like that? I don't know.
So different loan programs have different requirements. We are going to normally look for an appraisal to go out there. So the bank is going to find an independent appraisal management company. They go out, they inspect the house. They're looking really for value here. This is a dollar amount. They're not looking like an inspection. However, there are certain things that the FHA is looking for. The place has to be safe. If it's not finished or it needs remodeling or renovation, there are renovation products available. Right now, those are limited because of COVID. So once there's more liquidity in the market, I think we'll see more and more of those come back online. Again, there's other options. So yes, right now, finding something that is a fixer-upper might be a little bit tougher, but it's definitely a product that's out there.
Okay. Well, I know I can't take up too much of your time. So is there anything that you want to tell to everybody here or anybody else that might be listening or watching?
I think that right now is a great time to be buying if you can. If you're lucky enough to have a job and you're holding on to income, hopefully you have some savings and you're making it through. I know, like personally, a lot of people are moving from condos to single family homes. Do whatever's right for your family. All right, so don't just get into a house because that's what your family's saying, and don't just do what's right for you and your family. And then talk to a professional. So I would talk to somebody like you. You're an amazing realtor. You're a full-time realtor. So that's what I would say, right? Is, you got the hat on. It makes sense to me. You want someone that is going to care about your family and is going to be able to dedicate the time to do that. So get pre-approved. I'm happy to do it. Reach out to Lorena.
Where are you located so everybody knows where you're located?
I'm in Miami, right on the county line road in between Miami and Broward.
Okay. Maybe we can somehow link something with your address at the bottom of this post when I post it.
Yeah, we'll have a little flyer going across the bottom.
Like yeah.
Yeah.
I'm not that tech savvy, but I'll figure it out.
We'll figure it out. It's great. But look, we can do it virtual. We are doing a lot of Zoom pre-approvals now. I like to see people face-to-face. You can obviously come into the office. We have our social distancing requirements and masks and gloves and everything. So that's cool. But yeah, I think right now the most important thing is get pre-approved, see what you can qualify for. And that way you're not setting your expectations at a different level, or maybe you're looking at a $200,000 house when you could be qualifying for a $300,000 house, or the other way around. You also don't want to be looking at something that you don't qualify for. It sets bad expectations for yourself.
Right. Well, I thank you for your time. Say hello to your wifey. I love your little kids. Please say hello. I would like to have you back more often. So as people start asking you questions or wanting to dive deep, if it's okay with you, I'd like to set up more appointments or just keep saying, asking questions because people want to learn.
Always with you, Lorena. Really, it's a pleasure. So anytime you call me with the client, we can do a conference call, and I'm here to answer any questions you have.
Thank you so much. I'm going to let you go. I really appreciate your time.
Thank you, Lorena. Have a great day.
Bye.
Enjoy your family.
Thank you. Thank you.